Alright, everybody in the comment section right now, pay your respects to 3M because I have officially sold out of the position at a whopping 38% loss today. That's my biggest loss by dollar amount currently in the portfolio that I've sold out of. I feel like Jeremy right now, guys. This isn't a great feeling, but it's a much needed thing that I needed to do in my opinion. So today, I'm going to be sharing why I sold out of my 3M position. It's such a big loss, pretty much selling at the bottom, what I'm going to be doing with the capital, sharing everything transparently. This is not a fun video to make, but I want to be transparent with you guys because a lot of other finance channels are not very transparent when they lose money in the stock market. If I'm balls enough to show you guys my gains in companies like Microsoft, then I have to show you guys my losses in companies like Tattooed Chef and 3M. And for transparently, I only lost like $50 on the Tattooed Chef position, but still, $50 that could have been put into SPY. And if you appreciate that transparency, just smash the like button, subscribe if you haven't already. That's all I ask for. Alright, let's get on to the video.
Hello, I like money.
Alright, so I want to talk about my original thesis when it came to my 3M position. So when I began my real dividend investing journey, especially when I started the channel, it's probably about 3 years since then, I was really big into, having a diverse, set of companies, over diversification as I call it today. And 3M was one of those companies that I originally just bought. It was an absolute behemoth of a company. It hadn't gone anywhere. Of course, they had that high dividend yield. At that time, I really didn't pay attention to growth or free cash flow or anything like that. I used to know that they made a lot of money and they paid a lot back to shareholders through dividends. And at the time, that was really appealing for me as an investor. Now, not so much. I knew that they were a product that would always be in demand. There's a saying that you're never 10 feet away from a 3M product. Well, believe it or not, a slogan does not mean that it's a good company. Now, I'll say this with 3M, it's an absolute behemoth of a company, and it was printing earnings and money. The actual business is doing fine. The growth isn't great. It's not what I'd like to see today, especially if buying my stocks, but the growth was there. The business was actually doing fine. Nobody saw the lawsuits coming with 3M whatsoever. And this is, a perfect example of when people say no gains or returns are guaranteed in the stock market. This is a perfect example. When I was buying the stock in 2020 and 2021, it was one of the best options as a dividend investor. It couldn't go wrong. And unfortunately, it went wrong. And it went wrong very bad. So basically, for the foreseeable future now, 3M's actual business is doing fine. They're still, making earnings. They're still producing revenue. But they have to pay a lot of their earnings back in the form of lawsuits. 3M is such a big and giant business where they have so many things that they have to really, manage. And when you have a kind of business like that, that's an absolute behemoth, that's a giant, yes, you have a lot of diversification, but that means a lot more things can possibly go bad, and that happened with 3M. Another company that I'll make the analogy to is United Healthcare. UNH is another behemoth of a company, but there's so many moving parts in the business. For one, your circle of competency can be impacted, but also there are so many things that can possibly go wrong as well, where it's just really not worth the risk upside. I really built up my 3M position where I didn't know a whole lot relative to what I know today when it comes to investing. 3M does not meet the qualifications of the stocks that I would buy in today. And when I really thought of it from a different perspective of if I had, no 3M position right now, would I buy it as an outside investor? I wouldn't. And that really kind of clicked in my head, and that's a big reason why I sold. And the reason in my argument that I hadn't sold to this point is I'm huge against buying stocks at high prices and selling them at low prices. But I feel in this instance I need to make an exception. First of all, 3M is not buying back any shares or creating any other shareholder value on this crazy dip and decline that they've had. If they actually cut their dividend, which would not be the popular thing amongst the dividend investing community, and stock would sell off a whole lot, they could buy back a lot of those shares with that revenue and create a lot of shareholder value, and long term as a business possibly be appealing for me. There's a very good chance that they cut this dividend within the next 5 years, and another big reason that I was invested still was the giant dividend payments that I was getting. And yes, it's nice to see $11 come in as a dividend payment, every quarter from them, especially reinvesting at these lower prices. But once again, dividends are not free money. And I reminded that to myself. I hate selling stocks, especially when it crashes like 38% from when I bought. But at the same time, I do need to understand that there's opportunity cost. And I feel that 3M was one of those positions in my portfolio that could really hold me back for a while from, long-term outperformance of the S&P 500. So I figured I'd sell out of the position of 3M today. Sold out of my entire thing. I sold at a 38% loss. I lost about $370 in cash through the position, and I have about $570 in new capital in my portfolio to play with. Now, I allocated that money. I put it into Costco and Vici. That was about $300, but I'm primarily holding it right now. There's just not a whole lot of appealing opportunities in the market at the moment. I want to talk about 3M's dividend. Now, 3M's dividend is a huge controversial thing. Me personally, I believe it would have been better for the business if they just cut it. And dividend cuts are never a good thing. You went somewhere wrong in your investment thesis. And with 3M, I went wrong with not really one, understanding how big and the magnitude of their business, and two, just buying because it had good past returns and it had a high dividend yield. I deserve to lose money on this, I'll be completely honest. And yes, it's going to suck not having that extra $40 or $50 per year that I was getting from 3M in form of dividends, but over the long term, I'm going to easily make more than that. It's just going to be a matter of time. I felt it was also pretty petty that they were still increasing the dividend, even though clearly it's not going to be sustainable, a 0.5%. It just felt pretty petty, and they were trying to maintain that dividend king status that they have. I just don't think that's the best way to be running a business, and plus the dividend growth is way below inflation right now. Yes, it's cool, they have 6 or 7% dividend yield right now, but there's a big reason that it's selling off, and a lot of their earnings are going to be taken away due to these lawsuits. For me, it's just not worth the amount of years that I'm going to have to be waiting and just holding and sandbagging this stock, where I could be compounding my money in other higher conviction positions that I plan to hold for like 40, 50, 60 years. It just doesn't really make sense for me to continue holding this. I'm not going to plan on buying anymore, that's for sure. Right now for 3M, the dividend is the lifeline of this company, and I don't want to be investing in companies that have their dividend be the lifeline of it. And even prior to this, just looking at their earnings and their free cash flow, we'd see that over a 5-year growth rate, it's only 2.5%, and over 10 years, it's 4.15%. So just really just slowing, kind of declining free cash flow growth. And this is just my fault for buying into a very mature company that obviously has limited growth ahead of it. And as I harp on this channel, free cash flow is the most important metric in any business. Dividends are the result of a company's free cash flow. The free cash flow growth has just not been there for 3M, and a lot of their free cash flow is going to be eaten away with these lawsuits. They also have different types of lawsuits too. It's for different parts of their business, different segments. And right now it's not looking good for 3M. And obviously you want to be buying stocks when it's not looking good. 3M though, it may be, past the point of return. It's just not really looking good for them whatsoever. Long term, maybe it still could work out for them, but in the short to medium term, the stock is most likely going to continue, staggering, suffering, and I could be compounding my money in amazing businesses during this time. I shouldn't be sandbagging my portfolio right now. So where did I mess up here? One, it was a much needed lesson that I needed to learn in my investing journey. Nothing is guaranteed, and I learned the hard way with 3M. I'm happy now that I can, do further research on stocks. I bought the majority of my 3M really when I didn't understand much and just went off the prior fact that, they're 10 feet away from you and they have to be, in American society in the future, and they're going to have to make money. There's no other option. Well, there was another option, and their lookalikes are going to cut their dividend because of it. Just because a company is big does not mean that it's a good investment. Two, circle of competency. Circle of competency is something I've really been working on this year. Buy businesses that you understand, all right? Don't be buying these wild companies where there's 18 different segments and there's, 48 different subsidiaries in it. Just buy what you understand and buy more when it goes down. It's got to be simplified. In my opinion, if you're being held at gunpoint by a robber and they ask you to describe the business in less than 5 seconds and you can't do it, that you should not be buying that business. Investing doesn't need to be overcomplicated. Don't buy into businesses that are over-diversified unless you really do understand and have done your research, which not a lot of investors do. Alright, I want to thank you all for making it to the video. If you appreciate this kind of content, the transparency that I showed, just smash the like button for me. Also, check out the Dividend Stocks on Drugs merchandise, the best looking merchandise for any dividend investor. Thank you guys for watching, and Dividend Stocks on Drugs. Have a good one.